NIO just wrapped up one of its most impressive weeks in months. The stock finished Friday's session at $6.34 per share, up 81 cents on the day, a surge of nearly 15%. Intraday, it touched as high as $6.58 before cooling into the close. And in the aftermarket session, it even tacked on another 11 cents, suggesting that momentum may not be done yet. But here's the real story. For 4 straight sessions now, NIO has closed above the $5 mark. That's something it hasn't managed to do in more than half a year. Time after time, $5 acted as a ceiling, every brief breakout faded and sellers pushed it back down. This week, that changed. The stock didn't just cross 5, it stayed there. And by the end of the week, it had carved out an emphatic new level, rising well into the $6 range. That's not just a technical move, it's a psychological shift that investors have been waiting for. So what drove this breakout week? A combination of macroeconomic developments, company-specific catalysts, and market positioning all came together in a way we haven't seen in a long time. Let's start with the macro backdrop, because without it, the rally wouldn't have had the same fuel. The Federal Reserve's Jackson Hole Symposium is always a key event for markets. This year, Fed Chair Jerome Powell struck a more dovish tone than many expected. His comments signaled that the Fed may be preparing to cut interest rates as soon as September. For growth names like NIO, companies still investing heavily in expansion, still not profitable, and highly sensitive to capital costs, this is a game changer. When markets believe that rates are heading lower, it instantly changes how investors view risk. The discount rate applied to future earnings comes down, and suddenly, companies like NIO look more attractive. Treasury yields slipped, the dollar weakened, and risk appetite came rushing back. Growth stocks and EV names, which had been struggling under the weight of tighter financial conditions, were immediate beneficiaries. Now, while the Fed signal set the tone, NIO also had plenty of its own catalysts to amplify the move. The company unveiled its latest ES8 SUV this week, a premium 3-row electric SUV that enters the market as one of the largest pure electric options in China. What caught investors' eyes was the pricing strategy. Under NIO's Battery as a Service model, the ES8 comes in at a price point around $43,000, highly competitive against Tesla's Model Y. In a market where price competition has been fierce, this kind of positioning matters. The ES8 is designed to broaden NIO's appeal, attract families, and signal that the company is still innovating in the premium segment. But that wasn't the only product story. The Onvo L90, NIO's new mass-market SUV, continues to generate excitement. Analysts at Citi and elsewhere have been projecting that this model alone could generate as many as 10,000 sales per month by the fourth quarter. To put that in perspective, NIO currently averages between 20 and 30,000 deliveries a month across its lineup. So the L90 could add a one-third bump to volumes if those forecasts play out. For a company trying to scale, that kind of boost is transformative. Management has also been doing its part to reassure investors. CEO William Li has been talking about this stage of NIO's journey as a harvest period. For years, critics said the company was just burning cash, plowing resources into battery swap stations, R&D, and international expansion without delivering on profits. Now Li is saying the time has come to reap the benefits of those investments. Whether you take that literally or as investor messaging, it's a narrative that plays well against a backdrop of improving sentiment. Investors are more willing to believe that the heavy lifting has been done and that execution is finally catching up. The analyst community is starting to align with that view. Macquarie recently upgraded the stock to outperform, citing the positive trajectory around Onvo demand and the company's potential to scale volumes. That call added credibility to the rally, providing investors with an external validation point. We also have to acknowledge the role of short covering. NIO has been heavily shorted over the past year, with skeptics betting that the company couldn't survive in a cutthroat Chinese EV market dominated by BYD and Tesla. But when the stock broke back above $5 and held, shorts started feeling the pressure. The more it climbed, the more painful it became for those positions, and some had to cover. That additional buying added momentum to the upside. It's a familiar cycle for high beta names, and it looks to have played a part this week. Technically, this was a breakout week in every sense. $5 is no longer the ceiling. After 4 straight closes above it, traders are now treating it as support. That psychological flip is powerful. It means algorithms screen the stock differently. It means retail traders look at the chart and see opportunity instead of frustration. And it means that funds that won't touch sub-$5 equities may now reconsider. The next resistance levels are around 650 and then 7. If momentum continues, those are the targets investors will be watching in the coming sessions. Now, it's important to keep perspective. NIO is still not profitable. The company still faces intense competition in China's EV market, where BYD is posting record deliveries and Tesla continues to defend market share with aggressive pricing. Consumer demand in China, while stabilizing, remains uneven, and government policy is always a wild card. International expansion, including NIO's push into Europe, is still early days and comes with its own challenges. And the broader geopolitical environment, especially US-China tensions, remains a constant overhang for all Chinese equities. But what this week showed is that when the right mix of macro tailwinds, product momentum, and market psychology line up, NIO can still move in a big way. That's important for sentiment. Investors who had written the company off are now seeing that it has life left in it. Bulls who stuck with the name feel vindicated. And traders are suddenly interested again, because the volatility is working in their favor. So where do we go from here? Heading into next week, the key question will be whether NIO can hold $6 as support. If it consolidates above that level, the case for testing 650 and 7 becomes stronger. If it slips back toward 5, the breakout risks looking like a false dawn. Volume will also be crucial. This week's gains came with heavy trading activity, which is what you want to see in a sustainable rally. If volume fades while price drifts higher, that's a sign the move may not have legs. Investors should also watch for company updates around deliveries, especially any signs of strength in ES8 pre-orders or Onvo L90 traction. Those numbers will be the real test of whether the bullish projections are justified. And of course, keep an eye on the Federation. Powell's dovish tilt gave this rally its wings, but if the central bank backs away from that stance, the air could come out quickly. For short-term traders, the play is momentum. The chart has flipped, the sentiment has shifted, and the levels are clear. For longer-term investors, the story is about conviction. If you believe NIO has the products, the infrastructure, and the strategy to carve out a meaningful place in the EV industry, this week was the most encouraging sign you've had in months. To wrap up, NIO's surge to $6.34 on Friday wasn't just a number. It was a statement. It said that the company can still surprise, can still attract optimism, and can still capture attention in a crowded field. It showed that the market is willing to reward execution, willing to embrace the Fed support, and willing to give NIO another chance. The coming weeks will determine whether that chance turns into something bigger. But for now, the breakout is real, the momentum is real, and for the first time in a long time, bulls have reason to head into the weekend smiling.